So reality seems to have finally popped Fed Chair Powell's bubble of resistance to lower rates during his speech on Friday in Jackson Hole. But Mohamed El-Erian writes in the Financial Times, quote, Jay Powell's risk-averse stance at Jackson Hole missed an opportunity. Mohamed joins me now to talk about it. He is the Chief Economic Advisor at Allianz, former PIMCO CEO, and former chair of President Obama's Global Development Council. Great to see you. Thank you for being here. First of all, right off the bat, you surprised a lot of folks a couple of weeks ago when you suggested that Powell should resign for the safety and independence of our central bank, the Federal Reserve. After his statement on Friday, which the markets just loved, not so much today, but at least on Friday, do you think that he has calmed the waters enough so maybe he doesn't have to resign?
So first, his statement was a really interesting one because he pivoted, and he pivoted in a major way, saying something that some of us have been saying for a while, which is that the risks to the employment side of his mandate are bigger than the other risks. The question is, why did he pivot? And if you go back to what he said at the press conference, he said, I look at the unemployment rate. The unemployment rate hasn't changed at 4.2. And that's why, David, today, the markets are starting to question, is this a signal beyond September, or is this just about September? And I think the markets are realizing today, and you're seeing it in the stock market and in the bond market, that even if he can get the support of his committee, which he will be able to, this is only about September. This doesn't signal beyond. As to whether...
By the way, let me just stop you for a second, because some people would say, yes, it's 4.2%, it's the same, but there was a clear weakness. It was the numbers for the previous month of July came in very weak compared to what we were expecting, and the revisions were down too. So wouldn't you classify that as a weakness in the jobs numbers?
So I agree. I mean, what's happening is, if you look at the demand side of the labor market, it is weak. The supply side is being impacted by a contraction in workers. So the unemployment rate doesn't capture. The reality is, if you've got a job today, you're fine because companies aren't firing. But if you're trying to get hired, or if you're coming out of college and looking for a job for the first time, it's really tough out there.
It is, absolutely. No, I've got children of my own who face that problem. It's not necessarily the lack of jobs, it's just that it's very difficult to find new ones. And you don't have the flexibility to go into new occupations because people are holding on to what the employers are holding on to the folks they got. But you're suggesting that he didn't go far enough in really explaining what needed to be changed at the Fed. Can you summarize as quickly as possible, without a lot of gobbledygook, what needs to be changed at the Fed?
Sure. So for those of us who follow Jackson Hole as you do, this is an opportunity to think visionary, to provide strategic, not to give a play-by-play analysis. He gave a play-by-play analysis. Strategic, this economy is going through fundamental change. It is being rewired domestically. We are rewiring the international system. The labor market is changing. The role of monetary policy has to evolve. And in addition, the Fed needs reforms. It needs better accountability. It needs something to break this groupthink that has been damaging to the economy. And unfortunately, none of that was covered on Friday.
But let me throw out a radical proposal. Maybe what the Fed does is needs to back away. Maybe the Fed is doing too much or trying to do too much. Maybe it should only be a lender of last resort and get away from setting interest rates. What do you think of that?
So 10 years ago, I wrote this book called The Only Game in Town, this notion that the central banks had become the major policymakers. They do not have the tools to become the major policymakers. Now, they will argue that they stepped in because no one else was doing their job, that they felt that they were building a bridge. It turned out that it was a bridge to nowhere. And the result of that is too much liquidity was put into the system. We got inflation, we got all sorts of issues. So yes, there is an argument for bringing back the central bank to its core functions. That's absolutely right.
And by that, remember, the one that was added was the employment function. The mandate, they'd have two functions. One is to maintain the stability of the dollar, which is great because everybody who earns a buck these days wants to make sure it's worth the same a month or a year from now, if possible. With inflation, even at 2%, it's not possible. But that was its main function for many, many decades. And then they added on, I guess in the 70s, this other one of unemployment. Do those two functions conflict with each other?
So they're conflicting
Those two
today.
Mandates?
They're conflicting today. Okay, there's downward pressure on the labor market, and there's upward pressure on inflation. So that they do occasionally conflict. We are a different central bank. Most central banks have one objective. We actually have three objectives. There's a third one, financial stability, making sure that the financial system functions. And you want a central bank to make sure that the functioning of the system is maintained, because that is
specifically, if we have another 2009 event, we want to make sure there's a lender of last resort.
Correct, because what happened in 2008 is that the banks didn't trust each other anymore. And if banks don't trust each other anymore, they step away. And then you get what economists call a sudden stop. Everything stops. So the Fed comes in and says, trust me. You know what? I've got a printing press in the basement. You can trust me. And that's exactly what happened.
All right. Very quickly, this is something that involves pure politics, perhaps. But there is a governor, a Fed governor, Lisa Cook, who's apparently has conflicts of interest in her mortgage positions. The president said if she doesn't resign, because what has turned up, he's going to fire her. Is he within his rights to do so?
So those are unproven allegations. We don't know yet. And it's strange that a week later, neither side has come out with clarity as to exactly what happened. So I don't know whether it is cause or not. You have to prove cause in order for this to happen. What I do know is it speaks to the accountability of the Fed and the need to strengthen oversight. And that's something really important going forward.
And before you go, you got to earn your money. Are we going to have a September rate cut? Yes or no?
I think there's a high probability you're going to have a September
80%, 90% chance?
I'll put it at 80%.
And last week before the Jackson Hole
it was below
speech?
that. It was below that. That was quite a pivot. Yeah. And you saw the reaction of markets on Friday.
Yeah. Mohamed El-Erian, great to see you.
Thanks
Thank
for
you so
having me.
much for being here.